John, thanks for calling. Thanks for holding. How are you today?
Hey, Steve, I'm very good. Good week for you. Thanks for all you do.
You're welcome. Thanks for all you do.
Hey, Steve, I wanted to ask you to pull up your chart work on the June NASDAQ 100 futures.
Okay.
And share with me what you see that tells me that I'm wrong in speculating the high this morning up at 67.70, an exact 5786 test. Why it's not headed, destined to trade off lower, back down to that 64.30 low that was that occurred on Wednesday midday.
Well, how about if I do this? Instead of proving whether your conclusion is wrong or not, why don't we go take a look at what the charts are doing and have them tell us what they want to do, at least based upon what I see. And let's take a look at this morning. Let's take a look at this morning's action first, because you and I, there's a certain set of patterns that we love to pay attention to. And one of those is when price is moving higher, doing less relative energy. And as we take a look at it being the NQ on a 30-minute time frame basis, what we can see is that as we got to the 9:30 session, price was moving higher, doing less relative energy. The bears showed up. It was clear, but they reared their head right at 9:30 when they formed that bearish engulfing candle. For the next 30 minutes, more than 30 minutes, next hour and a half, just simply continued to sell lower, right into the breakout session from yesterday after the release of the numbers for Amazon. So you got a breakout, you got price coming back and testing a level of support. Okay, that's one thing. On the 30-minute chart, price kind of stalled here. So then you and I have to say, well, why did price stall in that area? Is there anything logical that we can find as to why price inside the NQ stalled there? For me, the answer was pretty easy, because the chart time frame they gave us, or has been giving us, the absolute best signal since January with regard to tops and bottoms is your favorite. Of course, you've made it my favorite, the 5-hour chart for the NQ. When we come back from this break, we're going to go take a look at the exact price level that's going to tell John whether price should move lower or higher. It'll tell you too as well. We'll be right back. Welcome back, folks. We're on the line with John in Philly, and he and I are trying to determine what are the charts communicating to you and I about what the next move would be, to the upside or to the downside. And as he pointed out, if we take a look at this morning's move here, as it was making its highs, it was making about a 0.618 retracement. I believe that's what you said, John, from the highs out here on the trading day of April 18th. And that would be a logical place where price would turn around. We had some other patterns as well on the shorter term time frame that we looked at. And then price was moving lower. Now, the time frame that we're looking at here is a 5-hour chart. It's been providing extraordinary signals for tops and bottoms out here. The most recent bottom, this one generated the signal back at 2 o'clock in the afternoon. This was on Wednesday, I believe, and then we saw price move up, get above Stevie's red line. And what we can see here, John, and I don't know why the phenomena occurs, I just know that it occurs. What we can see is that price oscillator at the bottom portion of our screen is getting up towards the zero line. And this is where we get the test where the bulls and the bears tell us who's in charge from this point forward. The test and the exact price point, by the way, and this is a 5-hour chart. The session on my system ends at 2 p.m. So we've got another 17 minutes. And the price point that we're looking at, and we're not, if it's a buck or two, it's not really convincing. But the price level that we're looking at is 64.75. Where it's, I'm sorry, is that 64? Did I say 64.70? I didn't mean that. I meant 66.58. We're trading at 66.58 and change out here. If price were to close below this level, then this would say to me, and continue moving, that price should then go lower. If this is a test. This is a test to see if it's bullish. This is what you would expect in a bullish move, because the retracement we've seen so far has been a 0.382 retracement. So we're trying to answer which one is correct. I say the chart will answer it for us. It may not be till 5:15, but right now it's just a test of support out here. And we can see that back here, the last time that this price oscillator got up to the zero level, back at about 2 o'clock on the 11th, is where you got that test of that red line. This is what a bullish test looks like. You test support, you keep going higher, and you have that rising price loss. It went higher till it made that seventh wave move. So I don't know. I can't say whether your conclusion is correct or incorrect. I know that there's a level of support, and to the short side, then the message would be you're going to close below that level that we just looked at, 66.58, because you would turn down the price oscillator below zero. And a falling price oscillator below zero is bullish, unlike the rising price oscillator that we had back here when we saw another test where prices were moving higher. So that's what I'm looking at. That's what I see. Does that help, or what other questions maybe?
Yeah, it sure does. Let me just conclude by asking, what, in your thinking, the feature of the NASDAQ 100 and composite charts up to highs on March 13th, having made higher highs with the relative price divergence, what that feature or what significance that holds in your thinking, please?
Yeah, so it's a significant bearish reversal signal. That's my thinking, because on the weekly you've got the divergent pattern, on the daily you have the island top out there. So what that means is that inside the composite you've got to find reasons to become bullish out here. And for me and for you, that's some kind of a pattern. Right now, this is at least saying to me, the daily chart of the NASDAQ composite, we've just kind of switched over to that. We can see on a daily basis that price is above Stevie's red line, 709,460. If that can hold a support, John, it just simply tells us there's a little bit more counter trend rally to follow. If price closes back below that level, then the route to the downside could begin. And I don't have any other completed pattern. I don't have any completed pattern here inside the NASDAQ composite to say that the move is over. I do in some other indices, but I don't inside the NASDAQ composite. Inside, for example, the Dow Equity Futures contract, yeah, I've got a bottoming signal, and that has held up pretty good. Inside the semiconductor index, this is going to be kind of interesting, because it made that seventh wave move a couple of days ago. Now, it really needs to close above that red line value of 1274.13. And, today was an opportunity to do that with Intel's earnings and so forth. So it hasn't really given a confirmed signal. But if I just say, if you and I have seen these seventh wave moves, and can you believe it? Can you believe those things? You get to that letter G out there, or wave number 7, and they can act as a reversal area. But your question about the NASDAQ, your question about the NASDAQ composite, I don't have anything other than for it to say right now that it's doing a little bit of a counter trend rally, and kind of goes with a thesis maybe of some window dressing stuff, I guess. I don't know, but that's all that I can come up with inside the NASDAQ 100 specifically, which we know has been hammered. The level to be looking at here now, the NASDAQ 100, we've got two competing on a daily basis, a very bearish pattern and a very bullish pattern. And I don't think it was on the NASDAQ composite, but you could correct me there. And that's the 3 drive to a bottom pattern that formed out here that so far has really held up as a bottom. So the way that I would draw my conclusions here in the NASDAQ composite is you've got a bearish top and you've got a bullish bottom. And to me, that almost just signals consolidation more than it does anything else, at the moment. That 3 drive, we know how important that is. How much bread have you made trading a 3 drive to the top or the bottom out here? And and price is still trading above Stevie's red line, 66.1210. So I see the NDX specifically, nice top pattern and also a nice bottom pattern. What can you add to what your eyes are looking at?
Yeah, Steve, I'll make the case for what I'm looking at that argues for a more significant decline dead ahead in the NASDAQ 100 and the composite is this. One, the price relative strength divergence that you pointed out back there on March 13th. Two, the high on April 18th at the fib 618 retrace exactly. I mean, absolutely precise.
Exactly.
That's number 2. Number 3, the presidential cycle, the midterm, the cycles for, or the average performance rather, for the midterm election year with a high on average April 18th, bullseye. Then looking at the top 5 market capitalization stocks within the NASDAQ 100, which, by the way, constitute close to 50% of the NASDAQ 100 capitalization. One, Apple, already in a defined downtrend on concerns on selling over concerns of weak iPhone 10 sales. 2, Microsoft, great earnings.
Hold your thought if you could. We're just about to go off the air because I want you to just go ahead and complete your thought, and you can do that, wrap that up in about 30, when we come back in about 30 seconds. We'll be back in a couple minutes. You can wrap it up in about 30 seconds. Steve Rhodes with TFNN. We'll be right back. Welcome back, folks. Right out to Philly to speak with John. Let him finish up his thoughts, and it's kind enough for him to share what he is looking at with us. So you were talking about the top 5 components inside the NDX 100. So go ahead and pick it up from there.
Yes, indeed. Thanks, Steve. Apple defined downtrend, at least on the short-term week, iPhone 10 sales expectations. We have Google reported blockbuster sales and profit growth, but you can see the stock's under pressure nonetheless.
Sure.
And then we just had Microsoft and Intel, fabulous sales and earnings growth in both cases. The stocks both spiked. But interesting, look at how they've sold off as if, well, sellers were just waiting to distribute the stock. They look like 3 drive to top patterns. Perhaps the best is out on both those two for the short term. Then you've got Facebook counter-trend rally, potentially topping under 180, and then leave Amazon aside, which is just a powerhouse. But when I look at all those, I can see the case for extended selling in all those, excluding Amazon, and taking the composite index back down under at least this past week's lows.
No doubt, and a real possibility. No question about it. And you got to take each of these individual charts one by one. In the case of Apple, close to completing a 1-to-1 A to B equals CD to the downside. Don't know what it's going to close like today. If we were to move higher, if the markets were to move higher, the NDX, specifically Apple, it's got the potential for a hammer candle. It's not there yet, but if you did, then you'd get at least a bounce to the 167 area. Whether that's the bottom or not, I don't know. If we don't have a bullish candle, though, then simply price can head lower, 159.91. So, John, thanks for calling in. I really appreciate it, sharing every thought you have with all of our listeners out there. And, folks, it's the end of our show for Friday. So, look, you have a safe weekend. Enjoy your weekend. But don't start your weekend until after the favorite Polar Bear show that's up next. And, of course, Tom O'Brien, 3 to 5. Then you can start your party. And we'll see you back here on Monday. Have a great day, great weekend. Take care.